Good afternoon. This is Brad Dennis with BIS Commodities with your update for the first week of June. Today we saw corn, beans, wheat all a little bit stronger. It's been a slow grind down in all three products, and today we did get a little bit of a bounce, specifically in the corn. The grind down was mostly attributed to anticipation of a Goldman roll and ideal growing conditions. Right now there's a very large spec position in July corn that needs to get out of that by the end of the month. We're reduced down to 600 contracts. So traders had been pressing the July contract down, even though basis kept firm on old crop corn. Today we did run into a little bit of a snag in the corn market in that up till now we've had ideal weather. Yes, there were some severe storms that went through Omaha, southwestern Iowa, and into Missouri, but minimal damage, whereas now they're talking about next Friday having a dome of heat over the corn growing region, and that added to a little bit of short covering out there in the corn market. RSI also was well below 30, so that saw a little bit of short covering as well. Technically speaking, yes, July closed over yesterday's high, which was 458, so a one-day technical reversal is out there. We'll see if there's any follow-through. Still very much about weather right now, though. In the beans, we're seeing a lot of the spreading happening out there, where July was the down month, and then we were up about almost 10 cents in November today. That old crop, new crop spread coming down, and I believe we traded under 240 today. One thing that they're looking at is, once again, a sizable long ownership in that July contract, and we have funds liquidating out of those long positions, which also lets you know too that in the processor's eyes, they've moved on from the July. They're out to the August right now. So is there a need to be into the July? No, it's telling me that the processor has enough for the immediate need, and he doesn't really need to worry about the July contract. So that just tells us that we've just got the specs in that July one right now, with about 130,000 contracts that have to be paired back before first notice day. While they pair that back and while the spreads react negatively, remember that will support your November beans or your new crop beans. Now, new crop, it'll be interesting to see what happens with that. You're already factoring in a huge carryout for next year. You've had ideal weather thrown at it. And you're actually probably seeing some more acres going to both milo and soybeans here down in the south or the southern plains, just because of the lack of moisture on the wheat crop. So you've got the potential for a very good crop, and we still can't get it to close under that 1210 area in November. So that area, a close underneath there, is getting more and more important, with probably 1184 as the next stop on the way down. Historic week for livestock, in that contract highs for June contract was out there. Feeder cattle trading over $2. Just really a big bid out there in that cattle market. As far as the fats are concerned, we've had about an $8 difference between where cash is and where the futures are, and we're starting to close that gap somewhat. And then over in the feeders, it's just been onward and upward, and kind of seems to us that maybe those guys that were selling the $2 feeders a couple days ago or today are gonna the market's gonna test them a little bit and see how strong a hands they'll be in, see if they get out of that position or if they hold on to it. Hogs pretty much range bound to a little bit lower in the front end there. Did have a little bit of a recovery today, but for the most part, we're not scoring any new highs out there. On the macro side, we did have unemployment data today. Figures came in as expected, 6.3 on the unemployment figure, with non-farm payrolls at 217. Traders were expecting 213, so kind of a non-event there. The big event actually on the macro side was probably the European Central Bank and the measures it took to create inflation in the Eurozone. They lowered their rates down to 15 basis points, and then they introduced a negative overnight rate. And what that basically is saying is that if you want to park funds at the central bank overnight, we're going to charge you to do that instead of paying interest on it. So they want that money to flow out there into the sector. The problem that Europe is having right now, though, is you've got a very high unemployment rate right now, so banks are hesitant to lend monies out there. What does this do in the overall scheme of things? Well, essentially it's weakening the euro currency and it's strengthening the dollar. And that's what you want to take away from this, is that the dollar is gaining strength, holding on to strength going forward. So if we do see that big macro picture come back in, the commodity dollar kind of relationship, that's the area that we're going towards. Next week we want to see what's happening with this heat. See if these lower prices are, translating into any added demand, and that's going to dictate things down the road. But mostly it's all about the weather, and we're supposed to get some decent rains here at the beginning of the week, get a little bit of heat onto this crop, get some GDDs, that'd be fine, and these crops will continue to flourish. So in my eyes, if you do get this, hopefully 10, 25 cent rebound, take a look at some new hedge strategies, and if we do grow this 166 crop that they're talking about in corn, we could be closer to $4 than the $5. Next week, the big event is Wednesday. We're going to get a supply and demand report out there. Varied guesses on which way that goes, so if you have questions about that, contact your broker in the office here. So that is it for the first week of June. End of broadcast.